Welcome to the latest Evershed Sutherland Legal Insights podcast.
Hello and welcome to this episode of Conversations in Credit. I'm joined by Joe Owens to discuss topical issues and news relating to consumer credit and mortgages. Hi, Joe.
Hey, Alex. Well, there's lots going on as ever. And I think we mentioned that on the last podcast that we did that we wanted to pick up on this current debate between regulators and government, etc., on growth versus regulation, or whether those two things can go hand in hand.
Absolutely, Joan. It's a really topical choice for this week. Obviously, on the one hand, there is a need for robust regulation to protect consumers and to ensure financial stability. And on the other hand, there's a strong push for growth and innovation in the financial sector. So balancing these two priorities is going to be quite a delicate act. And I think it's clear that both the regulators and the government are actively engaged in trying to find that right approach. I think it's fair to say there's a growing recognition that over-regulation can stifle innovation and growth. But it certainly sparked a lot of discussion. I'd be interested to hear what your initial thoughts are, Joe.
Yeah, no, I mean, it's been fascinating. And I know that you've been following along the House of Lords Financial Services Committee hearing as of I, and it's really interesting to see the debate play out. And I think what I've noticed is whilst there's alignment on certain issues, particularly around alignment for growth, alignment for the need of innovation, and for us to be really competitive on an international scale, I get the sense that there is a difference of opinion as to perhaps how we get there. And I think the debate's creating a little uncertainty in terms of what level of risk is acceptable in order to achieve that growth agenda. And I mean, it really is picking up pace, not just because of the hearings that I've just mentioned, but, Rachel Reeves has been very clear about growth being her number one mission. We've seen an exchange of letters from the FCA and PRA to government in terms of how they are taking steps to improve growth in financial services. And we know that Rachel Reeves is going to be hosting industry forums and really trying to set and then push this strategy to make sure that we are fostering growth in financial services. But I don't think it's an easy task.
No, I don't think it is either. I think you had also mentioned that you'd read the Labour's plan.
Gosh, yeah, they published that months ago, didn't they? A plan for financial services in which they said that their defining mission was to restore growth to Britain. And they were calling for a change in mindset and highlighted sort of, I think, 6 policy priorities, including delivering inclusive growth and embracing innovation and fintech as the future of financial services, and also that reinforcing of consumer protection and financial inclusion. But I think, what the real challenge, as you mentioned earlier, this delicate balancing act is recognising the need to balance consumer protection alongside being able to deliver competitiveness and financial stability.
Absolutely, and I think that really is the crux of the challenge. In order to foster a more dynamic and competitive financial services sector, how do you also drive economic growth, maintain that strong focus on consumer protection, whilst being innovative? It is a real challenge, and a really interesting balance that they're going to have to strike.
Yeah, no, agreed. And we've seen, haven't we, like the FCA and PRA, their letters do suggest some changes that could improve growth. It remains to be seen how effective these changes are. But, we've seen the FCA talk about removing the £100 contactless limit, pushing forward with the delivery of variable recurring payments. Interestingly, removing the need for all firms to have a consumer duty champion now that the duty's been implemented. I don't know about you, but I certainly recall lots of discussions with firms where they were debating who the right person was for that role. And you do wonder now that, maybe 18 months on, we're in a situation where the regulator's saying, well, that role's potentially no longer needed. Also talking of real changes to senior managers' certification regime, with the proposal to perhaps remove the certification regime. So it's really fascinating, seeing some of the proposals on the table trying to think about how effective those proposals might be. I mean, whilst firms might save money, for example, through the certification regime, I'm not sure how impactful that's going to be in terms of moving the dial on risk appetite. And I think the other thing that's challenging for firms is that the consumer duty is still relatively new, and it's still quite difficult to gauge, what the regulators' attitude towards risk is going to be in this outcomes-focused environment. And simultaneously, the regulator saying to government, tell us what an acceptable level of risk looks like. How many mortgage repossessions is an okay number? How many customers in arrears is an okay number? And it's all really, really challenging.
It absolutely is, and it's difficult. And I don't think that I'd want to be in charge of trying to deliver on this growth agenda, because I think some of the proposed changes really do reflect that appetite for streamlined regulatory requirements, really thinking about what's necessary, what's needed, and removing those unnecessary burdens that are on firms. But in particular, the consumer duty champion, do we think that is embedded enough into firms to remove that role where the whole purpose is for that person to be in the relevant rooms at the relevant time, to keep bringing the focus back to that consumer-centric decision-making process? So I'm not sure that is possibly the right thing to do at this stage, since the consumer duty is in its early stages of implementation, and companies really getting used to having the consumer duty and the champions. But that's just my view.
It's interesting, is it? Because one could argue that culturally everyone should be the consumer voice within an organisation. But sometimes I think it is helpful to have one person whose job it is to say, hey, hang a minute, let's just pause. Let's just think about the customer in all of this and make sure that, we're getting everything right as far as, the risks, the foreseeable risks that we can identify. So it is really interesting. I wasn't aware when the champion was introduced that it was an implementation role only. And I think a lot of firms will probably be thinking that way, particularly, as I said, a lot of them thought really long and hard about who the right person was for that role. So that is an interesting move. And I think the other contradiction for me at the moment is you've got this drive on the one hand to look to streamline and remove things like redundant roles with the call to input. But then on the other hand, you've got what look like to be quite material and really impactful changes for firms. So I'm thinking about things like the consumer credit changes, the product sales data, and kind of the level of granularity that the regulator wants there, but also the regulator's kind of publication of enforcement actions, which has got kind of industry up in arms really about the financial impact and in fact probably the anti-competitive impact of those proposals. So it's quite interesting to see almost at times we've got two extremes.
Yeah, absolutely. And interestingly, we've had the recent report on the naming and shaming, how not to regulate, by the House of Lords Financial Services Regulation Committee that you mentioned earlier. And that, of course, highlights the pitfalls of the regulator's approach to publicising enforcement investigations, and really emphasising the need for that balanced and fair regulatory framework. So I think it's good that we've got growth and innovation and ideas for change, but I think it's also coming with that acceptance is that not things might not work out the way that you want them to work, and hopefully the regulator continues in that process where they recognise that it might not work and roll back on it, as they've done in this naming and shaming example.
Yeah, and I mean, interesting title for a report, by the way. I think that wins a prize from my perspective. But I mean, I think what is encouraging is, like you say, the regulator is prepared to listen, and actually they've been quite conciliatory in acknowledging that maybe they could have done things differently at the outset. So I think that is really helpful. And hopefully that does give firms the confidence that we'll need as we go into this next phase, because, you know, as we touched on earlier, how this moves forward will be dependent on kind of how comfortable everyone is with the level of risk, you know, and reaching a view on what's acceptable risk, but also how comfortable people are going to be if they tried, you know, to get things right and they did what they felt was reasonable at the time, but looking back with hindsight, that didn't turn out to be a good decision. And I think it's that's causing concern, because of, I think, what we're seeing with large kind of claims and complaints activities in certain sectors, and just the realization that whilst the regulator may be tolerant of certain decisions perhaps not being the best decisions, there is always an uncertainty in terms of how other stakeholders deal with things.
Yeah, definitely. And I think it comes back down to that sort of open and transparent discussion around risk, culture, growth. What's the aim? What's the output? You know, we were talking, I think it was yesterday, about that record keeping mentality that's really useful for firms to engage with, so that you can document what the problem was, or what is it that you've identified that's causing you to make these decisions, and then why have you made that decision, so that when you go back and reflect and look back on what you've done, you can see how you reached that decision, whether it was a good one, or whether something actually has happened in the last 6 months that suggests that perhaps that wasn't the right decision moving forward, even though it might have been a good decision at the time.
Yeah, no, agreed. And so maybe, I never thought I'd say this, but maybe, you know, the Labour government nailed it in their plan when they said it requires a change of mindset. And I think that it requires a change from everyone. I think it requires a degree of trust and confidence. But I, for one, am poised with bated breath to kind of see what the outcome is of the FCA's call for input, and what the House of Lords feedback is in terms of the outcome of all these oral hearings that have been taking place.
Yeah, absolutely. And something else that you mentioned the other day when we was talking was the recent speech from Emily Shepherd around culture, and culture being key, and that is going to be a key focus for the regulator. And it comes back to that change in mindset. So I think we're surrounded by changing mindset. Yeah,
and culture, which the regulator always talks to us about and always says it's critically important. But I think culture will be really, really important. But, you know, so will that open and transparency that we've also touched on. So I, for one, think it's a really exciting time to be involved in financial services, and I can't wait to find out what's going to happen next.
Absolutely. I mean, I think we could talk on this topic for hours and hours, but let's wrap that up for today, Jo. Thank you very, very much, and thank you to our listeners. Can't wait for our next discussion. Thank you for joining us, and we hope you will join us again next time. Thanks, Jo.
Thank you for listening to the Evershed Sutherland Legal Insights podcast.